Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, with an update on Nasdaq-100 to discuss technical levels and performance on the Nasdaq-100 as August trade comes to a close. And August was a good month for stocks, Chris.
Absolutely. August was a great month for the NDX. It's a great month for a lot of the companies, not only in the Nasdaq-100, but across the broader Nasdaq Composite Index. Smaller cap fared a little bit not as well. However, the large cap names where the money's being put continue to drive this market higher, and being seen today, even with Apple and Tesla both splitting today, you're seeing upticks there, big percentage moves. Tesla's up over 11%, Apple's up 4% today. That's adding a lot of points to the index, and the technicals are reflecting those point gains.
Yeah, Tesla's just been quite remarkable through the month of August, actually since the pandemic started. But Chris, let's take a look at the Nasdaq-100 and a fresh look at technical levels, because it certainly has changed since the month started.
Yep, you know what? It's another new high today. We had a high of 12,161. The index seems like it just really can't stop, especially with the top 5 names pushing higher. Even with Microsoft pulling back a little bit on the potential for this TikTok deal, it's down 1.5%. It's only shaving 16 points off the index. So you still have Apple, Tesla, Amazon all leading higher. What's interesting here is that we talk about the RSI Relative Strength Index a lot. RSI measures overbought and oversold conditions. We mention it quite often on this podcast. And we haven't really hit an above 70, which is an overbought condition recent in this until really today. So when I went back and looked at the chart, RSI over 70 is telling you that the buying momentum is starting to wane a little bit. However, you can't really tell about that today. It usually takes 2 to 3 days for that to flow into the stock. What you're looking at here, for the last 2 times since the pandemic recovery, the RSI has touched 70, trade a little bit higher, 73, 74, 75. Today we have a 77 reading on the RSI, entering a good overbought condition. What's happened on both those, one was June 10th and the other was July 10th. Both of those followed with a 6.5% decline over 5 days from that high level. Now, did that break the pattern of the chart here? It did not. What it signaled was that it's overbought in the near term, needs to pull back and look for buying to continue unless there's some other item that kind of broadly changes the dynamics of the market, which there really hasn't been. You've got non-farm payroll coming up Friday. Could that change it? Not so much. Is there a presidential election coming up? Yes, but that's down the road. So what you're looking at in the near term here is what has systemically changed within the index, and not much. So a 77 RSI is indicating that we may be due for a pullback over the next couple of days. And if that 6.5% moves, that puts a measurement of 11,360 on the index, pulling back a little bit. Again, well above the Fibonacci levels, which we highlight in the chart here. Remember, the 76.4 retracement, which is the next support level, stands at 10,890, well below that 11,360 level. So what you're looking at there is just a normal pullback in the ebbs and flows of the market. Now, what's giving it the bounce today? The Apple and Tesla split, definitely people were buying into that and continue buying it today. Amazon as well continues to move higher. There's news out in the stock, people rewarding that with the drone contracts. NVIDIA, AMD, Intel, Netflix, Zoom, all acting much better. Facebook, again, still bouncing around all-time highs. The big losers here today aren't really big losers. Google's off 0.5%, that's shaving 5 points between the two classes, Microsoft, et cetera. So what you're looking at here is just a quick pullback over the next couple of days before the momentum starts to take this higher. You can make a case on this that after this pullback, the RSI should drop to about the mid-50s, which is a middle road, which is where we've been on this higher baby steps up day over day. And that could measure close to 13,000, pardon me, on the index.
Well, Chris, it's interesting when we take a look at your next chart here, where we look at the individual constituent performance. When we had Brian on last Thursday, he was taking a look and was mentioning that there's wider breadth, which means there's more participation with the other stocks in the index, because of course, as you had mentioned, there was that concern about the concentration of those, top 10 stocks that are really leading the way in terms of performance. So it is encouraging to see other constituents participate.
Right. What Brian's talking about, when you look at the value versus the weighted index, the value is looking at the constituency as a whole on a percentage basis, and the breadth is looking at the highs and lows of those membership moving forward. You're seeing a number of other companies still trade near 52-week highs, but what you're also seeing is a lot of companies trading at all-time highs throughout this pandemic. That's giving it an even bigger bump across the board. And the number of companies that are trading near 52-week lows, a lot of those sectors have rebounded, but we don't contain a lot of them in the net NDX. The financials, the energies, the home builders, we don't see that in our index as much. It's really tech, consumer, and healthcare. And that's where the money's flowing to. That's where the index is getting their bump from. And that's why you're seeing a number of other members of the index move higher, as we mentioned before.
All right, Chris, great stuff. Thanks for joining us on Trade
Thanks,
Talks.
Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.